What's going on, everyone? My name is Nicholas Merton here at didnt, and today is September 25th of 2017. Well, folks, as you all know, it's time again for another trading tip here at the didnt channel. And today I want to answer a question that I get a lot throughout the community of investors and traders here on didnt. And it is no other than how to use the Fibonacci Retracement tool. It's a very common tool that investors use in both equities markets as well as cryptocurrency. And I think it's going to help you get a step ahead of the competition, knowing when to sell in and lock your positions on trades and investments. So, without further ado, let's jump right into it. And today I'm going to start off by showing you all how to get it set up. So, the Fibonacci Retracement tool is very common, so you just got to simply go to your Tools tab, depending on what exchange or what trading platform you're using. In this case, I'm using Bittrex, and all we have to do is go down here to Fibonacci. And now that we've got it selected, we can go ahead and plot it on our chart. Now, the important thing to understand is when you're plotting the Fibonacci, you have to drag it out by the peak of the recent highs and then also the bottom of the recent pullback. So I'll show you in a simple way how that looks. So every time you're going to be using the Fibonacci Retracement tool, you're always going to have a top that was in the past and then a bottom which was more recent. So generally speaking, we're going to draw it from the top of this wicks here, and we're going to drag it down here to the bottom of this wicks right there. So that's perfectly plotted right there. So now we have our Fibonacci Retracement tool plugged in on our chart, and there's a reason why we plug it in the way we do, using the top and the bottom and having the top first comparative to the bottom, because this is how we use the Fibonacci Retracement tool generally. Now, everyone's got different strategies with it. You could go on YouTube and find a multitude of different approaches that people have with the Fibonacci tool, and they'll all debate and argue which way is the best way to use it. However, this is the way that I use it, and generally speaking, everyone uses it in the sense of plotting it from the top to the bottom. So, why is this? Well, the Fibonacci Retracement tool is going to show you how, at what levels most likely institutional sellers are going to start coming in. And we're going to use it to stay a step ahead of the game to see when resistance and support might come in. So, let me show you an example of how I would approach this. Right now, we're on NIO's chart right now, and we can see that NIO has not only had a pretty solid top, we can see that it obviously topped out around, I think it was 1,400,000 Satoshis, so definitely had a nice run up, but we can also see it had a very nice pullback as well. We had a bottom around, I think, at the bottom of it, it was 386,000 Satoshis, so definitely a nice pullback on this one, and it looks like it was a clear bottom on NIO. So now that we're calling the top and the bottom on it with the Fibonacci Retracement tool, we can get a lot of information if we're accurate on this. And I can assume definitely that the majority of traders right now think that NIO is going to probably start trending up, at least if they're considering on buying. So they can probably call this the bottom and the top as well. So if other people out there are doing that and they're seeing these same Fibonacci Retracement tools, especially the institutional buyers, they're going to start setting their sell levels at these different Fibonacci retracements. Now, what do these mean exactly? It's basically saying that if you want, to get a 61.8% return back up to these highs from the bottom, you're going to need to reach this level, okay? So that's generally what it means. It's basically saying to reach back 50% of what this entire gap is between the bottom and the high, you're going to need to get to this price level. So that's what the percentage points mean. But again, you have to keep in mind that these are most likely, in a sense of using the tool, are going to be levels where you see resistance. So let's go ahead and think about this in a strategic way. I always tell you all on my channel, whether you're investing or trading, to always be a little less greedy than the other guy. To lock in profits in cryptocurrencies, and I can tell you it'll pay you off so much in the future if you are disciplined like this and are a little less greedy than the majority of people. It's always good to look for not only the big evens and sell a little bit before that, but also a little bit before the Fibonacci Retracement levels. Again, locking in profits is the #1 step to actually making profit long term. If you get greedy and you say, no, I want to get it exactly like that Fibonacci Retracement, you're not going to most likely get it all the time. So let's go ahead, let's play it safe here and zoom in a little bit on our chart. We can see that, ironically enough, the 38.2% level is very close to 750,000 Satoshis, a very big even level. Well, in this case, let's go ahead and lock in a quarter of our profits a little early on to make sure that we solidify our sale. So maybe let's get it at 730,000 Satoshis. Now I probably won't be able to draw the line exactly on there. Bittrex isn't the best charting application. However, We'll get our sell level there, and we'll sell a little bit before that Fibonacci retracement. We'll lock in a quarter of our profits, and again, we're going to do this as we go up the Fibonacci levels. And this is generally how I would use it. I usually, if I'm using the Fibonacci and I'm buying at a bottom, I'm not selling everything at one level. As you all know, I take partial shares. I sell a quarter or maybe half at certain levels. So again, let's take a look at the 50%. Now, we're probably going to see some resistance, even if we come up and we find support here. Most likely going to see some resistance around here. Well, look at that. The 50% is right near 900,000 Satoshis. Again, another big even. Well, why don't we set our sell level for another quarter%? A little bit early. Let's do 880,000 Satoshis. Do it a little bit before that sell level. There we go. I'm going to drag it down a little bit just to make it simple so you can see the Fibonacci level. So we've got our second level there. And now we've already confirmed where we're going to lock in 50% of our profits. And again, we can do the exact same thing at these levels as well. Look where the 61.8% level is, 1,000,000 Satoshis. Well, maybe we should lock in some at around 980,000 Satoshis. I think that'd be a smart level right there. Definitely a nice disciplinary level to sell. Alrighty, awesome. So now that we've got that plugged in there, we already know how to lock in 75%. And, you know, again, it depends on your long-term verifications. If you think this is just going to blow out, blow out the water on, the recent highs on NEO, and you think it's going to go much higher, again, maybe you'd want to not set one at each of the Fibonacci retracement levels. But again, the way of using these is to spot when there's most likely going to be selling, resistance at price action. And that doesn't mean that it can't break past it. That's why we have higher levels. But again, when you see Fibonacci levels, when you see these retracement levels, you can expect some decent resistance, some struggle to get to the higher price action. But once you usually get past these three levels, there is a common belief that you will see much more breakout, because look at the gap between these percentage points. These are the very kind of rough areas that you have to test through and really break through to get that roaring confidence to come back in. And once we get past there, we'll most likely have a continuation on the rally. Now, depending on how fast this moves up, we don't know when that's going to get up here. But again, I generally say that once it gets past these levels, and generally from the time I've been trading in equities and in cryptocurrencies, you can see that once it breaks past these levels, it's a smooth uptrend up to the previous highs. And sometimes you can break past them. So the last level I would really say is dependent on whether or not you think it's going to break past the highs. In this case, we'll play it safe like we're doing a trade on NEO and do it a little bit before this Fibonacci level at 1,400,000 Satoshis. So maybe we'll do like, seeing as this is a big gap, we'll do 1,350,000 Satoshis. And ironically, there was actually a candle just right there that had that exact same level. So we've got all four of our sell levels placed on the chart here. So that's generally in a very simple way how we can use the Fibonacci retracement level, different levels on the Fibonacci retracement tool. So we can know when to lock in profits a little bit ahead of the other guys, so we can make sure we solidify profits and it's not just on paper that we've made money. We're locking in cash, or in this case, Bitcoin. But again, the same principles apply to stocks and cryptocurrencies. There's no real difference at the end of the day. It's all about making sure to use the Fibonacci retracement tool to spot when institutions are going to be selling. That's it, everyone. I guess that's pretty much all I can say about how to use the Fibonacci retracement tool. It's not as complex as people think it is. It's just a very useful tool to know when you're going to see resistance or sell side action. And if you can use simple things like this, along with the other indicators we've talked about, you will be milestones ahead of the other competition in cryptocurrencies. That's it for the video, everyone. Thank you all so much for watching. If you've got a tool that you want me to cover or a tip that you'd like me to share, please leave a comment down below. I always love getting feedback from you all. And anyways, that's it for the video. And until the next one, I will see you all in the next